it away because it's very exciting. Please make him very welcome.
Thank you, Christina. It's a great pleasure to be here. It's the first time I've presented on behalf of Siren Gold. We've been in Fortress, New Zealand, as you probably know, and only allowed to get out in the last few weeks or so it's good to be here. We've got a really interesting project. It's based in New Zealand, so it's the Reefton Goldfield, and I'll go through a few slides and explain what's going on there. But that is the intercept and the drill core we got a few months ago, I guess, or 4 weeks ago. I'll tell you what the assay is later on, but it's very rich, and there's quite a bit of visible gold, obviously, in the core, you can see. So just a quick thing on the company. Brian Roden's the managing director and chairman, myself, technical director, and Keith Murray's the non-executive director. We listed in October 2020. Raised 10 million, and we started drilling the next day. So we've been drilling constantly since October 2020 now. Got a market cap about 40 million. Share price is roughly around 40 cents plus or minus. So we're based in the top of the South Island on the west coast. You may be not recognise that map that well, but it's the top of the South Island. The green rocks are these Paleozoic rocks, a band of turbidite sequence with a number of goldfields. You have the Reefton Goldfield, the Lyle, goes up to Golden Blocks in the north. And the significance of that is if you look at the image on the other side, is that was originally part of the Lachlan Fold Belt. So you can see the Reefton located somewhere, whoops, sorry. You can see Reefton located somewhere in here, south of Tasmania. So 60 odd million years ago, they were still joined. You could have driven from Melbourne down to Reefton, but with the opening of the Tasman Sea, that split off and now domiciled in New Zealand against the Alpine Fault, which is the plate boundary. It's not surprising that the rocks look the same, the mineralization is the same. Just a quick look at the Bendigo, Ballarat, and the Fosterville zone. They're a bit different. The Bendigo, Ballarat's deeper, mesothermal, that's 6 to 12 kilometres. Doesn't have a lot of sulfide, a lot of free gold with carbonates. Going to Fosterville, it's quite different. It's epizonal, shallower, 4 to 6 Ks, lots of sulfide, arsenopyrite, particularly a secular arsenopyrite, which we have as well, and the stibnite mineralization, which gives them that really high grade. And if you look at all the elements of the mineralizing event, the system, the folding, the age, the rocks, the type of the rocks, the type of mineralization, we have the same stibnite, same arsenopyrite, same age, all falling in these fold hinge zones. The only difference between Fosterville zone and Reefton is that red dot is they've got some carbonaceous shales, and we don't have those. We just have a more finely bedded turbidite sequence. But the Reefton Goldfield itself, it's an historic goldfield, 35 kilometres long, outcropping, another 35 kilometres buried at least. So it's probably a 100 kilometre long structural zone. There's a structural corridor through the centre, like all these things do, where the fold's a bit tighter folding, faults cutting through, and these chutes forming the fold hinges. The Siren Gold has a strategic package there, 850 square kilometres of tenements. We're in the pinky red colour, and to the north of us is Reefton Goldfields, and that's sort of funded by Sprott and Leonard King. So we've got the Canadians to the north. In the middle, in the yellow, we've got Federation Gold. So they're currently developing twin declines to mine the Blackwater Mine. So they've got 3.3 kilometre declines to get to the bottom of the old mine, and then they're taking it down to minus 1,500 metres, hoping to extract about 700,000 ounces of gold, and they should be processing that material in about 2024. That's backed by the Australian Super Fund and also the New Zealand government. We are a green Labor New Zealand government, but they put 15 million into that mine to help them get developed. So the west coast of New Zealand is very pro-mining, local councils, the Labor governments and the Green governments probably not pro-mining, but at least investing in this development. And so there's increasing support. You can see in the green over there, that's mineralogy. That's Clive Palmer, so he's pegging ground to the north as well. So we're in good company. So I didn't say this thing, but historically it's produced 2 million ounces of gold, average grade of about 16 grams per tonne. A few big producers, the Blackwater Mine, it's at 740 odd thousand ounces, a couple others at 500,000-600,000 ounces. So we're focusing this stage on the Alexander Mine. these shoots we've been chasing from surface. So you can see those red shoots are all associated with anticlines. There's synclines between anticlines where the red shoots are. Getting some pretty good intersections. You can see the one at the top, that's the one we talked about, 2.5 meters at 358 grams. That's located down, that's located down here. It's one of our deepest holes drilled to date. But all these holes up through here have visible gold in them. And you can see the intersections. It's typically sort of 4 meters at 5 or 6 grams average, we think, but maybe up to 7. But we certainly get these high grade intersections coming in at depth. And we seem to be getting more visible gold now as we're getting slightly deeper. This whole zone, that's about 1.3 kilometers to give you scale. So we're looking at doing our maiden resource estimate in the next 2 to 3 weeks. So look forward to that coming out and keep an eye on that. That'll be sort of covering that area that's covered by that sort of orange dot. So the top of the system doesn't cover this or the deeper structures we're finding now. Probably the mineralization is one of the key things. It's 4 to 5 meters thick on average, but it tends to be this secular arsenopyrite mineralization we're seeing. So a lot of refractory sort of gold with quartz veins with free gold in the middle. Very similar to what they find at the top of the Stavely deposit. This is the drill core from that hole 84. The actual core, 0.9 of a meter went 1,500 or 1,460 grams. You can see the gold quite visibly in there. That's this part here, or the gold on the edge, this back here. So these are still starlights, and if you crack one of those starlights open, that's what you see on the surface. But the material above it, you see it's still running 18 grams. That's the acicular arsenopyrite mineralization. It's disseminated sulfides. Doesn't look very interesting. Doesn't look like ore, but quite often can run up to 30, 40 grams per ton. So we're building up a sort of 3 to 4 meter thick zone that encompasses both the acicular arsenopyrite mineralization and the free gold and the quartz. If we extend those shoots a bit deeper, we know this is part of the epiazonal mesothermal system. These fold hinges and shoots go for long distances. We know that from deposits nearby and deposits in Victoria. The black dots are obviously the drill holes we've drilled. We've drilled 100 holes now since we started up, and we're now starting to push this thing deeper. So we've effectively drilled down to 500 meters. That's about 500 meters below the surface. Bit of topo here that modifies that. But so that's basically where our resource estimate will come out of that top sort of 500 meters on those 2 front shoots. And now we're starting to progress and drilling deeper down through into the zone. You can see topo is quite favourable for us. So even if we push these down to 2 kilometres down plunge, we're still only about 1 kilometre below the surface. Because of the topo as well, we can put a decline, a portal in about this level. That'd be a horizontal sort of 600 metre tunnel, and we'd have 500 metres of mineralisation above the decline and 800 metres or 1 kilometre or more below it. So this is the acicular arsenopyrite mineralization. It's quite important, that disseminated mineralization. This is the free gold in that hole. But these 2 styles of mineralization, you'll see the next slide, but they're quite common at Fosterville as well. This is the Blackwater Mine. This is the one they're currently developing, sitting over here. That was mined down to 710 metres. This is all the grade control data from the old mine. It closed in 1952, so you can see the same sort of shoots coming down. And they've drilled it down to minus 1,500, so the total length there is about 2.4 kilometres. Highest grade drill holes right at the bottom. So there's currently twin declines being developed to intersect them around here, and they're going to drill out the ore body from here and hopefully get this into production in 2024. The reason I'm showing you that is this is 8 kilometres away from Alexander. You can see the geometry is pretty similar. If Alexander extends for 2.4 kilometres, we'd be down here somewhere. And I think this will go a lot deeper than that, and so will Alexander. So we're in some pretty good country, pretty continuous, these structures, pretty continuous shoots. If you look at Fosterville, because we always like to compare ourselves to them, but we think we've got genuine reasons to do that. Again, our shoot's shown, but this is the Fosterville shoot coming through here. Probably the key thing to note is this grey sort of colour is the acicular arsenopyrite mineralisation, and that's what it looks like there, same as ours. Just fine needles of arsenopyrite with gold. But once they get down below 800 metres, they get into this antimony gold. And your secular arsenopyrite gold's 5-6 grams. They get into antimony gold and up to 20-30 grams. And then deeper down below 1,300 meters, they get free gold only and get this really high grade gold zone. So we're still sitting up in this area. We're getting the secular arsenopyrite. We're getting a lot of free gold sort of coming in now. We're not seeing a lot of antimony or stibnite yet. You can see there's one rock chip there of 3.4% stibnite and 14 grams. But they didn't see a lot of stibnite at the top either, and that comes down a bit deeper. So hopefully this model works for us, and as we drill into these sort of zones down here, we may start getting that overprint of that second gold phase. But the stibnite's, it came about 50 to 60 million years later. It's about 370 million years old versus the secular arsenopyrite, which is 420, 430 million. So you get this overprinting, and this free gold zone down here is thought to be part of the stibnite zone. It's just too deep to form stibnite. But we do have stibnite in Wellington. This is one of our other projects at Big River. There's a stockpile of massive stibnite and stibnite veins sitting at the old battery site. This is the Big River battery. So this is only about 5 kilometres away from Alexander. Lots of massive stibnite. You can see the grades on there, running up to 80 grams per tonne gold. This is the secondary stibnite that comes in, they find at Fosterville, and that's very common in the recent goldfield. All the mines to the north have a lot of the stibnite mineralisation, which means it's been in place quite shallow, 3-4 kilometres, maybe 2 kilometres depth, and it's coming quite late. So we have a look at Big River. It's our second project we've been drilling. It's got a historic production of 136,000 ounces at 34 grams. They mined that down to 560 odd meters, and we've got an exploration target on that of 100 to 125,000 ounces. It's just based on one shoot, which I'll show you in a minute. But you can see the best drill, 6 meters at 21 grams, 3 at 18, 2 at 12. Again, getting high grade mineralization around the old mine workings, and we've pushed those 2 latest intersections are deep, getting below some of the old mine workings deeper down. Still getting really good thicknesses, good grade. And it's looking really promising. And we have a 4-kilometre strike of the system, so I'll show that in a minute, but the soil geochem extends further to the south for another 3 or 4 kilometres and looks very prospective. Big River mine is sitting up on top, the head frame's still there. I mined it down to 12 levels, mined a number of shoots about the anticline. So there's your central anticline where the shoots form, and the second little anticline here. So we've been drilling the second structure, getting some good intersections at the top, 4 meters at 4 sort of grams sort of material. We're currently drilling down through here. But certainly with the deeper holes we put down here are well mineralized as well. So we think the system will be very strong, big system, getting 20 or 30 meters of mineralization in some places. And we'll over next year, we've got a drill rig sitting here now that'll sit there for the rest of the year. And we'll just keep drilling probably down to about this 500 meter level, and hopefully get to a situation we're at with Alexander River by the end of the year. A long strike from Big River. This is the Big River mine sitting here in the soil geochem. So you can see a very good strong arsenic soil geochem anomaly tracking for about 3 or 4 kilometres just to the south. We call that area St. George. A number of old small mines there. They mined down 1-2 levels. Quite a few historic grades and reefs. They mined up to 72 grams. You can see the gold, we're a bit of a lack on the gold assays are still coming, but you see the gold's mimicking that zone as well. So just to finish up, we've got an exploration target at Alexander, 500 to 700 odd thousand ounces. We'll bring out our maiden resource estimate in the next few weeks. If these shoots go down to that sort of 2 kilometre mark or deeper, then we're looking at potential of 1 to 2 million ounces at least. Big River, we've got a small exploration target just on one shoot, 125,000 ounces. So we're looking at a combined sort of exploration target of somewhere around that sort of 600 to 800,000 ounces. And a lot of potential to keep chasing these things deeper and find additional resources. And St. George, Lyle, I haven't had a chance to talk about Lyle Goldfold yet, but I'm in booth 56. So if you want to come and talk further and ask any questions, running out of time now, but feel free to come along and look at the presentation. It's on my website as well. Thanks very much. Thank you.
Thanks, Paul, Angus, and Sarah. Booth 56, as he said, and I've just seen a couple of you have just walked in and looking for seats and have plugged yourself up down the back. There are a couple of seats down the front. So if you want to come down the front, seat yourself up with your bits and pieces, there are table seats available. And I'm sure we're more than happy to share down the front, boys, aren't we? Yes, that's right. Come on down the front and then make some new friends and investment, have some conversations. Barton Gold, do you know about Barton Gold at all? They are leading the way for development of a new primary gold industry over in South Australia. They've got a 1.1 million ounce gold resource across 2 large-scale mineral systems, significant exploration momentum at the Tarcoola and the Tunkelia gold projects, and they've also got the ownership of the region's only gold mill. And this fellow up here to inform us a little bit more is MD Alexander Scanlon. Would you please make him welcome, everyone?
Thank you, everyone. Good morning, almost good afternoon. Yep, this is just before we kick off, this is actually a shot down of our very shallow open pit at the Tarcoola project. So that's the Perseverance mine that was operating in 2017 and 2018. But just to get into kind of the overview of who we are and what we're doing, we were looking around a few years ago and saying, where do we really want to focus if we want to make a difference and do something unique in the gold space in Australia? And when you look at South Australia, as a state, it's very well represented for gold mineralization, and as a state, very underrepresented in terms of gold production. So it's got about 25% of Australia's gold resources. Obviously, those are predominantly located in major mines like Prominent Hill, Carrapateena, and Olympic Dam, but only about 2.5% of Australian gold production. So what we did is we came and we put together essentially a pure play, pure South Australian and gold explorer. And it's sort of a strange thing to say, but we're actually fairly unique on the ASX in that regard. We put together essentially the majority of all historical and contemporary exploration and production ground in the Central Gawler Craton, along with ownership of the only regional gold mill. So what we've done is put together a strategic platform with good ground position that we can build around, both in terms of resources, but also leverage that infrastructure. Our objective is really large scale here. So we don't want to run back into operations. We want to focus on really large scale exploration. This is an area that has been left behind for the past 30 years. We are bringing a lot of new technology in, or bringing a lot of existing technology as well, and new applications. The challenge in South Australia is exploration undercover. We've got a lot of new tools that allow us to essentially see through cover and infer structure, and therefore target it more precisely. So we are focused on large scale exploration, large scale discovery, and the idea is to establish a new standalone gold producer that essentially reinvigorates the South Australian primary gold industry. We've got an excellent team. We've got excellent assets. We're very well capitalized, and we're very busy. So we've just started what we think will be well over 20,000 meters of drilling for this year, last week in Tarcoola. Thinking a little bit more about our development strategy, it helps to look at our assets in sort of a hub approach, because it's easy to lose the scale of these things when we put them on a single picture. We divide our assets by a northern and a southern hub, and the northern hub is what holds essentially our infrastructure package. So we have a 650,000 ton per annum plant. It's on care and maintenance. We also inherited with that plant the old Challenger underground gold mine. It's a name that some of you will be familiar with. It's also deep and complicated, and we're really not focused there. The reason is that we are focused on the southern hub. And the reason that we're focused on the southern hub is we presently have approximately 1 million ounce resource there. And the technical work that we did pre-IPO as well as post-IPO is showing us that sort of every rock we turn over, if you will, we're finding more structure, we're finding more mineralization. What we've identified is essentially 2 major mineral systems that have been underexplored, underdrilled, and have significant demonstrated upside. So we're really leaning into that. We're focused on, instead of deep, complex gold, we're focused on shallow, open pittable, large-scale bulk gold mineralization, both low to moderate grade and high grade that can supplement a strategic large-scale development. We do have the only gold mill in the region. That gives us a bit of leverage. We can think about a medium to long-term development plan where we're targeting real scale by combining a new plant with Tarcoola and Tunkelia. But we do have the option to use our existing plant and process ore from Tarcoola and the region of that plant. That plant was processing ore from Tarcoola during 2017 and 2018. During 2018, the mill feed was about 3 to 6 grams per ton. So very, very rich and profitable operation if you have the mill feed. And that's why we're working on building out the footprint this year of these assets to then really build up resources. Innovation and technology is a really big part of what we're doing. As I mentioned, we're sort of trying to do things differently. Rather than drill 50 or 100 meters to try to figure out where we might have structure undercover, we're trying to find structure first and then precisely target that. So we're working with a lot of leading technology providers. And one thing we've announced recently is a sort of regional strategic joint venture with Sensor to adapt their discriminant predictive targeting technology to the Central Gawler Craton. So taking it from a predominantly outcropping style of mineralization or terrain and taking it to an exploration undercover thesis. And if we can tune that technology, it really becomes kind of a groundbreaking or sort of district opening type of tool that we can use to try to sort of defeat cover. Since IPO, we IPO'd in June last year. We've made a lot of progress with a lot of this new technology. So we found 25 new structural targets right on our mining lease at Tarcoola, 3 new gold zones between Tarcoola and Tunkillia. That's added about 2 kilometers of gold mineralization. So we've done that all with about 10,000 meters of drilling. So quite a bit of valuable conversion in terms of the meters that we're actually drilling. We're really building up our team in South Australia, really leaning into that identity. Some of you may have noticed we've just announced that we're doing a transition in terms of our chairperson. So Ken Williams, the former CFO of Normandy Mining, has joined us and will become the chair from the 1st of July. And we're also getting a lot of support from the government. So we've received about $380,000 in grants from the South Australian government. So really, really focused on essentially taking a leadership role in South Australia, but specifically in this area. On the corporate side, we've got a pretty tight share register. I think our top 50 on about 70% of the stock, a very strong board of directors, people who have experience building plants, exploring, developing, operating, shutting down. And we've got an excellent exploration team. So Mark Twining and Ian Garcett have come on and are leading our exploration efforts in South Australia. And we've also brought on Nick Byrne, who was the former CFO of Heathgate, which operated the Beverley and 4 Mile mines in South Australia. So jumping into the assets now, we'll focus on Tarcoola and Tunkillia because that is where we're spending our money. These 2 assets, again, it's easy to lose the scale of these. Together, those are about 2,500 square kilometers of tenements. They host the majority of modern exploration resources. They also host the site of most productive activity over the longest period of time, right around that Tarcoola project. So we've got the existing open pit there at Tarcoola called the Perseverance Mine. And we also have our 223 deposit at Tunkillia. These are areas where we've mapped out 2 very large mineralized systems. They're 70 kilometers apart. So they really do function actually as a hub. We're the first people to take these projects with a dedicated exploration budget and treat them as a co-development opportunity. We have recently started drilling and that drilling has taken place starting at Tarcoola. So dialing in on Tarcoola, what we're looking at here is about 1,200 square kilometers of contiguous tenement package. The Tarcoola goldfield was discovered in 1893, so the same year as Kalgoorlie. And during the early 1900s, there were sort of the old timers, if you will, chiseling out a lot of quartz hosted gold at about 30, 40, 50 grams per ton. But in a more contemporary setting, there's not been a lot of systematic large scale exploration. In our ground, we have a lot of very interesting geological features, one of which is the Lake Labyrinth Shear Zone. Some of you may be familiar with Indiana Resources. They're currently exploring at Minos, which is about 50 kilometers east of our open pit. Some very interesting results there. On that Lake Labyrinth Shear Zone, we have our Mizpah Prospect, which we'll be drilling next in a week or 2 time. It's a very large deflection and dilation zone on that shear zone. It's never been tested before. So that's one of these opportunities where we're saying we've got the mining lease, but we're really stepping out and building a broad footprint now. So really about building large scale geology while at the same time building convertible resources. When we dial in on the open pit, we'll start small and go big. This is a very shallow pit. It was mined only to about 30 meters depth in the north and 70 meters depth in the south. Very little exploration around it. And when we came in to test some of the depth extensions in 2019 and 20, we identified an entirely new gold zone at the southwest edge of the pit, which we call Perseverance West. So this is high grade, quartz hosted gold mineralization that is 20 to 25 meters below surface. And we're looking at intercepts of anywhere between 3 and 8 meters of sort of 10 to 50 grams per ton. So very interesting. And certainly if you're looking at any extension of this pit, it's a potentially valuable paying gold zone that is also complementary to, It's also complementary to this Pila conglomerate. And this Pila conglomerate in Euro limestone structure is where the highest value gold came out of this pit. So it is a conglomerate structure that is essentially shot full of mineralization and runs anywhere between 10 and 50 grams per ton when extracted. When we step out to the mining lease scale now, our inference or thinking pre-IPO is really that there's potential for a lot of repeating structures across the mining lease in the vicinity of the pit. And a lot of the work that we've done there now has sort of validated the presence of multiple shallow structural targets under as little as 2 meters of cover, but there's very little surface expression, if any at all. So this really is the value of bringing in a lot of this new technology. We've brought in ground penetrating radar, which is a new application in this area, and it's identified about 25 targets that we will now go back and sort of test, drill, and validate some of these targets, both to validate the use of the technology, but then to see if we might have repeats of those same sort of high-grade structures across the mining lease. But the big picture at Tarcoola really is the big picture. And this is where we sort of step out. And here we're really only looking at essentially the southwest edge of that 1,200 square kilometers. We went back and reprocessed old seismic data using much more modern processing technology. And what we identified was essentially the genesis or the explanation for the high-grade mineralization at Perseverance. And what we found was the Perseverance shear, which is the main mineralizing structure, extends to about 7 kilometers depth. It passes through the Tarcoola Formation, which is essentially the mineralizing basin in the region, and it plumbs directly into a Hilteba intrusive body. So these are the engines of growth, the intrusive bodies that power mineralization throughout the Gawler Craton. What was interesting is that we identified a dozen or more parallel and cross-cutting structures that are perfectly analogous. So they pass through the same mineralizing basin and plumb into that same intrusive body. So we were the first people to identify that. And that's really given us quite a firm perspective that, hey, this is not X marks the spot and we simply hope we can grow X. There are potentially dozens of X marks the spot, one of which, as an example, in our Western Targets area is Warburton. This is an area where one of these structures comes to surface. It's also an area where in the early 90s, somebody drilled a hole and intersected about 3.5 grams per ton over 16 meters, essentially from surface, never followed up. Why? Well, distractions, lack of capital, bad market. If you're drilling in the late 90s, drilling for gold is not a very exciting thing to do. So things get left behind, but there's a lot of high value information for us to follow up. When we look down at Tonkilia, we're 70 kilometers to the south, and we're in a very different setting. Now we're talking about very large shear zones. So on our tenements, we have about 50 kilometers worth of shears, and where we're really focused in the first instance is the Jarlbrinde shear zone. In the northwest corner of our tenements there, we have the 223 deposit. So this is a resource we declared in November 2020, pre-IPO. It's about 965,000 ounces. The majority of the drilling that was done there was done at a time when the US dollar gold price was between $300 and $800 per ounce. So the search domain, if you will, in that drilling was sort of artificially restricted in terms of how we might think about it today. That mineralization is open to strike. It's open along depth. And what we're really doing is looking at targeting a lot of high value satellites in the vicinity where we do have a lot of historical data, and new tech is helping us track in on new bodies of mineralization and new orientations that were not previously recognized. When we look at the 223 deposit itself, and the 223 deposit is this sort of black body there. It has not been mined. It's an inconvenient color to show, but it shows us where it is. What we're looking at is sort of very broad, highly continuous mineralization. It's the kind of thing you can sort of drive an 8-lane highway through. And all around that, we have a number of historical drill holes that were never followed up, but picked up very interesting, essentially geochemical data. 30, 40, 50 meters under cover, and then stopped in mineralization. So for the last 2 years, we've been working on analyzing that, running old data sets through new tech, bringing in new tech, and drill testing some of these theories we've formed. And since we've IPO'd, we've actually identified 2 new gold zones at 223 North and Area 191. In the middle of the 223 deposit, we have confirmed our suspicion there's actually a higher grade zone. So one hole picked up about 45 meters of mineralization, probably averaging about 3.5 grams per ton. So that changes the dimensions that we're thinking of when we talk about development and sort of ranking of or staging of a development. And the real value of Tunkillia, aside from the potential there in that northern area we were just looking at is only right there. We've got another 20 kilometers of shear zone, and the same models that we've tested and validated at Tunkillia predict that mineralization or style may continue down the shear. So really what we've built is a very strong platform, sort of defensible both in terms of its scale of resource as well as sort of an infrastructure, well, let's say a strategic infrastructure position. We're using a lot of innovation, a lot of technology to identify opportunities. We are growing these footprints very, very rapidly. We have a very high conversion rate between drill holes and structure and mineralization. We do know what our opportunities are. We've got about 20,000 meters of drilling underway, so we'll have a tremendous amount of news flow coming out, as well as a number of additional corporate initiatives. And really, we have an excellent team, both in terms of relations with state, local stakeholders. We've got the team, skill sets, and people to actually move this forward. So we think it provides very strong platform of leverage to investors, both in terms of the gold story, both in terms of infrastructure, and also a very low risk jurisdiction. If you like these low, lower grade, large scale, open pittable resources, our proposition is we're a very compelling value amongst our true peers in the ASX, and among them, we are actually the only ones who actually have a mill. So pretty useful. But thank you very much. We're at booth 44 if you guys have questions.
I think that's the closest I've got to one of our presenters in the last 3 days. Alexander, you're a very naughty boy. Good thing that you were keeping our interest there. And look, we haven't been to South Australia that much during this conference, so we'll let you play the field there. We're going back to WA though for our next presenter. I know you're going to heard of this one, Great Boulder. And their primary focus is the evaluation of their flagship Sidewell project, which is near Mizpah in Western Australia. High-grade gold intersections over a 6 kilometre strike at the Mulga Bill deposit means this project has, dare I say it, let me say it loudly, quietly, 1 million ounce potential, 1 million ounce potential. And it is developing into one of the best gold exploration stories held by a junior company on the ASX today. Joining us on the stage today with that great big smile is Andrew. Go on, that's it. Do it, lad.
What? Smile?
He's focused so hard on this presentation. Andrew Patterson, welcome. Put your hands together for Andrew Patterson, everyone.
Thank you. It's great to be here. Thank you to Vertical Events for the opportunity to present the Great Boulder story here in Sydney. And I'm sure there's probably quite a number of people in the audience who haven't heard of this story, and I think it's personally a cracker. We just heard a couple of good stories beforehand, and I'll explain where I see the value in this one. So really, we are a gold-focused company. We have 3 projects. The main one, the flagship, is Sidewell at Meekatharra, which is where we really think there's a 1 million ounce potential there, and that's very much what we're focused on delivering in the year ahead. We have a second gold project just north of Kalgoorlie called Whiteheads, which has plenty of merit on its own, but it has become a second string project just simply due to the tenor of results at Sidewell. And then kind of left field opportunity is up in the Irahidi Basin, the Wellington project, which is, we think, an analogue to the Rumble Resources discovery of the last couple of years. We also have some exposure to magmatic copper nickel sulfides through our spin-off Cosmo Metals, which listed in January. So capital structure, been a bit of a rough ride on the stock exchange the last couple of weeks, which is kind of annoying. So our market cap today is about 39 million. I think there's certainly plenty of room to improve that, and that's part of the reason why I think it's the best value stock on the ASX. The other part, however, is 3 parts to every story: people, projects, and value. And people is really a big tick in our favour, with the team headed up by Greg Hall, who's a globally experienced geologist, a giant in the industry. and just a wonderful guy. He's an awesome chairman. We've got our gender diversity well and truly covered there, and those non-exec directors aren't there for their looks. They're actually all very smart people. Karen O'Neill came on the board recently, and she brings some diversity in terms of commercial and finance experience. The rest of us being geos, you know, we all tend to disappear down the same rabbit hole. So having Karen with us, she keeps us on the straight and narrow, things like compliance and reporting. And when it comes time to raise more money, I'm sure she'll be right in amongst it. Other noteworthy faces there, Dan Doran, who's in the audience here, very smart young geo. I'm pretty sure you'll see him up here presenting his own company story in the next few years, but at the moment he's very much focused on this one. And Scott Halley, who's done a huge amount of work on Sidewell. He actually gets so excited about it, he's never sent us an invoice for any of it. And he's a phenomenal geochemist, I think Australia's best geochemist. So projects, location, right next to Meekatharra. We're neighbouring Westgold's Paddy's Flat operation. Their mill's about 12 kilometres away. Our Mulga Bill project is about 10 minutes drive from town, so it's an extremely good location, serviced by highways, power and phone signal, all that sort of stuff, hospitals, everything you would want. The obvious question is why is this big project there? You know, it's in an area with more than 100 years of mining history. And really part of the story is that historically everyone has chased the banded irons, that these high magnetic units up the, particularly on the western side of this greenstone belt. The other part of that explanation is that it's actually under alluvial cover. There's a blanket of about 10 to 15 metres of mainly alluvial sand over the top. And that completely obscures any indications of mineralisation. So I guess partly because of the old paradigm, all the gold was in the biff. There's no sign of it undercover. Everyone just thought the middle of the syncline there was completely dead. It wasn't actually discovered by us. Originally, what you might call the discovery hole was drilled by Western Mining as far back as 1995. So there was already data there. It was later drilled by Dore Mining when they were in the thick of developing Andy Well, just to the north. And so there was enough assays in drilling already there to attract our attention. And we came in about 2 years ago and joint ventured this from Scott Wilson in Kalgoorlie, who's also the guy who vended Andy Well. So he has a very long history in the Meekatharra area. Excuse me. A bit of a COVID hangover. So Mulga Bill is a fascinating ore body. It's completely different, not been found in the Meekatharra area before. So it's a type of mineralisation that's not been previously recognised. And it looks like, a lot like an intrusive related gold system, which therefore has potential for a good continuity to depth. Excuse me a second. Thank you. The other interesting thing about that, of which there are many, is it has really strong pathfinder association, particularly with bismuth, which is quite an unusual pathfinder in the Archean. And we're getting very strong bismuth over about 120 metres wide at +1 part per million, which is a significant anomaly, up to about 250 ppm. So very, very strong bismuth. The significance of that, we're dealing with a deep weathered profile. In that weathered zone, the gold can be depleted or remobilised. The bismuth stays behind because it's a very stable element. So we know, because the bismuth correlates to gold, if we find bismuth, then we'll find gold underneath it. So it's as simple as that. Interestingly, there's no obvious analogues for this in the Archean in WA. In fact, it would be probably more at home over here in the Lachlan Fold Belt. So very, very unusual. And Scott Halley, with his vast experience, I've been nagging him to give me an analogue so I can say, you know, it might be this big or it might be that deep. And he actually can't give me one. So it's a fascinating subject. We have other prospects in the region. Ironbark, which we discovered last year, is just nearby, about 1 kilometre away. That's probably a fairly standard orogenic shear hosted gold occurrence. We don't know how big that is yet. Mulga Bill 6 kilometres long, so I don't think we're going to find anything else that's as big as that, but we'd love to. And then up the north, we've got Jones Well, which we're just starting to explore now, and Matilda, which is a historic high-grade prospect, which we need to go back and do more drilling. Zooming in on Mulga Bill, this is the centre of it there, and you can see the pink dots is mostly where our RC drilling is, and that's really just a 1 kilometre section within the 6K footprint. And we've got intersections there up to 150 grams a tonne, so very, very exciting intersections. And we're continuing to drill the hell out of it. So, you know, we look forward to delivering more of these sorts of numbers to the market. So what this means with the intrusive related interpretation, which looks a bit like an intermediate sulfidation epithermal for the nerds in the audience, with a very strong bismuth association, that's indicative of very large size potential. We've already tracked it over 6 kilometres. We haven't seen the edge of the system. The alteration zoning is so strong that we haven't actually got it far enough away from the ore body to see what the background looks like. We're getting extremely high grades, you know, things like 14 metres at 36, I think, was one of the top 10 hits on the ASX for the whole of last year. And close to existing infrastructure, so it's really ticking all the boxes. Looking in long sections, so this is just a projection of that central area. It's about 1 kilometre there. There's a dike sketched in on the right-hand side. And you can see there's still heaps of work to do, a lot more areas to drill. And we've got what you would call economic intersections or high grades, 30 to 40 grams a tonne over that whole distance. And a lot of structural complexity. And that's one of the other parts of the puzzle, is that we're still unlocking those structures as different orientations of mineralisation, which equates to different drill directions and a lot of drill metres. There's about half a K there, largely untested. We do have air core drilling over the top of it. And there's a big geophysical target there, which has been defined in this plan view by gravity, electromagnetics, and just recently by IP survey. So this is actually hot off the press. We're yet to release full details of this IP survey. This is a 3D IP, which has basically lit up those disseminated sulfides over that zone. And we know that there's an association of sulfur with gold. So we would hope to find more gold in the sulfide zones. That sulfide in the rock mass also explains the gravity target. So that's nice. And the IP and the gravity correlate really well. So now it's a matter of sticking more holes in it, basically. So getting a good correlation between gold, gravity, and sulfide. And that gives us a very nice three-dimensional target over particularly this 3 kilometre area. A couple of cross sections here. This is really just put in to demonstrate different styles of mineralisation that we're seeing. The one on the left is some subvertical zones associated with the shear and the lithological contact. The lithologies there are very, very subtle, so it's actually taken us a while to figure out one from another. They're all basically intermediate volcaniclastics. And the importance of that subvertical orientation is that earlier we had hit very high-grade flat-lying veins, which are difficult to piece together. And the subvertical ones, not only easier to drill, they're also much easier to mine. So that's a significant step in our understanding. The section on the right is the big geophysical target I was talking about. So the contours there is a gravity bullseye. We're seeing that associated with a deeper IP target. The 3 holes across the top, 250 metre deep RC holes, they all intersected broad zones of disseminated pyrite. But in hindsight, they didn't actually get deep enough to properly test that target. We have since drilled the diamond tail on the first hole there on the right. And we're yet to get the assays back from that. That goes down to 450 metres, so that should be getting pretty close to the target zone. As I said before, this map shows our bismuth runway outlined in the contours there. These are basically the priority areas. At the RIU conference in February, I discussed a brand new drill hit right down the south end, so 6 Ks to the bottom, where we intersected 24 grams a tonne in an air core hole there completely out of the blue. So we're very, very keen to get down there and put some RC holes into that. And as I said, this thing's so big, we've still yet to see the edges of it. Done a little bit of preliminary work on metallurgy. It's all pretty plain vanilla. We've got excellent leach characteristics, 99.7% recovery, which meant that we had a residual tail of 0.1 grams a tonne, which is about as low as it's possible to go. Moving forward, this year, the plan is to put 100,000 metres into the ground. That'll be air core, RC and diamond drilling. So that'll keep us pretty busy. We do need to basically double our field team to achieve that. That'll still only mean we're a company of about 12 people, so we're certainly very lean and mean. And that should deliver an exploration target, so we'll be able to say we think it's up to this big. We certainly aim to be illustrating that 1 million ounce potential and moving towards the resource as early as we can in the new year. Regionally, we're testing those other prospects and ongoing collaborative partnerships with CSIRO and Sensor, who are our neighbours to the south, so that's delivering value as well. Now I need to hurry through the other two. So Whitehead's north of Cal, great project, not doing much with it. I think it has a lot of merit, but we won't be drilling there much this year. We do have discoveries there in the order of 50,000 ounces. And that's the Blue Poles discovery. And then further north in the Irahedi Basin, this is Wellington, which is a prospect we identified about 2 years ago. And the significance of this is that we will have access to it very soon. We've just negotiated a heritage survey with the traditional owners. If this is anywhere near as good as we think it is, it could double our market cap with one drill hole. If you go and have a look at the Rumble experience, you'll see what I mean. So all of that is really a long-winded way of saying I think this is the best gold story on the ASX amongst the juniors, and you'd be hard pushed to find a better gold project for less than 100 mil. So I think this is a very, very attractive proposition. Thank you.
And Andrew, you were perfectly timed. Well done. Thank you so much. Thanks for enlightening us that. Were you talking about Scotty Wilson of the $10 million windfall? The same one from Kalgoorlie?
A bit more than that,
Yeah, it was a bit more than that. He knows his stuff. Interested is on your project. All right, Scott Caithness, would you come up and join me, please, sir? There he goes, sauntering up from the side there. Now, the next presenter on stage is going to discuss with us Alderan. Now, am I saying that correctly? I should have asked that before. Alderan Resources. Now, they've got a portfolio of copper and gold exploration projects in Utah, USA, and the company has been actively exploring its flagship Detroit project and has received excellent initial results from its maiden drilling program at Drum, and that's an historical oxide mine, isn't it?
That's correct.
It hasn't been, no one's been in there for the last 30 years.
That's right.
So we'll be interested to hear what you found and what it might mean for us if we choose to invest with you. Would you please put your hands together, ladies and gentlemen? Alderan, Scott Caithness.
Good afternoon, everyone, and thanks very much for the intro. I'm here to talk about Alderan Resources and the exploration we're doing in Utah. Alderan hasn't done many presentations over the last few years, so it's sort of almost like a relaunch of the company publicly. Oops, I went one too far. Okay, just in terms of the company's highlights, all of our projects are located in Utah in the USA, which is a tier 1 mining jurisdiction. You'll hear that a lot from a lot of companies, but this was ranked number 6 in terms of policy on the Fraser Institute survey last year. Our flagship project, is the Detroit project. And I'll just get used to this with a pointer. Whoops, that's not it. Sorry. Okay. Got it. Our flagship project is the Detroit old copper gold mining district up in this area, southwest of or central west of Utah. We also have the Frisco project, which is farmed out to Kennecott Expiration, which is Rio Tinto, who are exploring that for porphyries at the moment. And then we have 2 early stage projects, White Mountain and Valley Crossroads, which are also copper gold projects.
I'm going to be focused on the Detroit project and in particular the Drum gold mining area. So Drum Gold Mine, it was added to Detroit, to our Detroit project area only at the end of September last year. It's an old gold mining district. It produced 125,000 ounces in the past at a grade of 1.2. It's all oxide. It was mined between 1984 and 1989. There are historical assays in some of the drill holes up to 39 grams per tonne. There are high-grade intercepts in some of the historical work up to, including 23 meters at 5 grams per tonne. And there's been no exploration done on it since 1989. So nobody's drilled a drill hole, nobody's done any work on it. The process that we've gone through with Drum since we acquired it was basically, we've looked at what was remnant mineralization. So we've modeled up the past work that was done. We've identified remnant gold mineralization of somewhere between 40 and 60,000 ounces at between 1.1 and 1.4 grams per tonne. The deposit is open, however. So that modelling is just on the historical work. And we've also gone through some verification work in terms of pit sampling, and we've got grades up to 11 grams per tonne. We're just in the process of getting results back for our first stage of drilling on that prospect. We drilled 9 holes in total in terms of in the program. The first holes are very encouraging. The drilling is basically designed as remnant to detect the remnant mineralization, just confirm what we think was there from the historical work. It actually is there. So we've only got results back for 2 holes at this stage, but they're very encouraging. Just north of the Drum mine, Drum is down here. We've got the Mizpah Prospect here, which was also explored but never developed back in the 1980s by the same company that did the work on Drum. And we've done a little bit of drilling on Mizpah to also look at what the possibilities are and extensions there as well. I'll just take you through a little bit of the modelling and some of the historical work that was done at Drum. So as I mentioned, we modelled the resource based on the historical work that was done. There's over 400 historical drill holes at Drum. The average depth of those drill holes is only 49 meters, sorry, from surface. And you can see some of the grades of mineralization that were intersected in some of the old drill holes. So, 13.7 meters at 6.4, which includes 4.6 at 18 grams per tonne. You can eyeball down through those. The one that I particularly like to focus on is this hole YC174, 15 meters at 4.5, which includes 6 at 10.3. The reason I focus on that is it's down here. It's 150 meters outside the boundary of the West Pit down dip. And it was never mined and never looked at. Our process, we've obviously modelled these holes and to try and determine what the remnant mineralization is. We've also gone back into the pits and we collected 75 rock chip samples, channel rock chip samples through the pits. We got grades up to 10.7 grams per tonne. So of the 75 rock chip samples, 50% of those graded greater than half a gram per tonne, and 22 of those holes graded greater than 1 gram per tonne. So we got grades of 3 grams, 5 grams, 7 grams. And bearing in mind, again, all oxide material. So all heap leachable, simple mining and processing operation. Basically, the deposit sits in a corridor that's basically 400 meters wide by a strike length at this point of 600 meters, and it's open down to the southwest and also down to the south. Just in terms of the modelling, this is basically a long section through the deposit going from the northeast to the southwest. And you can see that the mineralisation historically mined, there's the East Pit, West Pit, sits within 2 separate mineralised horizons, 2 separate rock units that are divided by a limestone unit, which is unaltered. What we found with the modelling was there were zones of mineralisation below the pits and obviously also down here towards YC174. On north-south sections as well, we found exactly the same, that there is mineralisation below the bottom of the pits. So basically indicating the potential. Also, what we found was this zone here, the East Pit mineralised horizon was not drilled below the West Pit, and the pits are adjacent to each other. So all of this becomes open stratigraphy. And also down here, the distance from the west pit to 174 is 150 meters, and then it's open. And that distance on the lower horizon, the Tatau horizon, is greater than 400 meters. So all completely open. The longest intercept that we had was 70 meters at greater than a gram per ton. And also there are assays down the drill holes up to 39 grams per ton. In terms of the geology, as I mentioned before, there are two mineralized units, primarily the Tatau unit, which is what was mined in the east pit, and the Chisholm unit, which was mined in the west pit. Sits within a structural corridor. There's two major bounding structures that are trending northeast-southwest. The King Tut fault is the one that's actually been named. And within that, you've got thrusting along the boundaries between the geological units. And you've also got steeply dipping northeasterly structures. So what we refer to in terms of those steeply dipping structures is things like this. You can see the stratigraphy just bending up. And what happens is the mineralization goes down in a series of steps within the stratigraphy. So we refer to those steps as ramp structures. This is the drilling that we've done to date. So basically, as I mentioned before, our objective has been to verify what's been there in the past. So that we know that there is actually ballpark 50,000 ounces remaining here at the moment, but that 50,000 ounces is open. So our objective was to go in and drill test some of those places below the pit boundary where we estimated that there was some mineralization still remaining. So we've tended to drill on the northern side and the southern side of both pits, and we've come down and tried to replicate this YC174 hole. We've only got assays for 2 holes so far. We're awaiting the assays for 5 holes. So at the northern end of the east pit, our first hole intersected 16.2 meters at 1 gram per ton, which included 6.3 at 2.9, which we thought was an excellent verification. So this section through here shows, it's hard to see, shows the zone of mineralization coming through. And then what we think is historically, there's a very thick intersection here, which is a little bit higher grade. It's about 56 meters at 1.8 grams per ton. We think that represents a ramp structure. And our hole is drilled on the down dip side of that and continues, is indicating that the mineralization is continuing down dip, which is what we're expecting. In terms of the second hole, was drilled at the southern end of the east pit. And again, exactly the same scenario. We've got the mineralized intercepts coming through here, and our hole is drilled down through here where we'd estimated there was maybe 10 to 20 meters of remnant mineralization. We intersected 17.8 meters at 1.7, which included 6.6 at 2.5, again, on the down dip side of the mineralization. So we believe that we're starting to, well, first of all, we're verifying the mineralization that we thought was going to be there. And also we're indicating that it is actually open down dip. We're awaiting the results for the West Pit holes. These holes historically were drilling quite narrow zones of high grade, so sort of 2 gram per ton material, but mineralization or intersections in the historical holes of somewhere between 5 and 10 meters. So hopefully we'll replicate that. We did have a problem with hole 7. Hole 7 was drilled through waste dump material to start with. We drilled it, but we lost the rods right at the bottom of the hole, around about 20 meters short of the target. So we think we may have drilled into the mineralization, maybe just touched it, but not gone through it. So we'll have to go back and wedge off that in the next round of drilling that we're planning. So basically at this point in time, we're successfully verifying the mineralization, and we are indicating that it is open down dip. So the potential is quite significant. As I say, it's open 600 meters long at this point in time, but completely open on a down dip. It is oxide mineralization. What happens is because where there are structures along the geological boundaries between the unit, we drill through actually unaltered limestone in between the 2 units, and then we go back into oxidized material below that. I mentioned Mizpah, which is a prospect to the 2 kilometers to the north of Drum, also within our ground. Mizpah again was drilled extensively in the mid 1980s with about 200 drill holes. And its grade is a little bit lower than Drum, and the thicknesses that we can see are a little bit lower than Drum, but it's from surface. So it's never been mined. And you can see some of the intersections, these are some of the better intersections, 11 meters at 1.9 from surface, 12 meters at 1.7 from surface, 22.9 at 1 gram from 3 meters down holes. So basically it exists from surface. The interesting thing about these drill holes is, again, I emphasize they were after oxide, they mined oxide. When the holes hit primary mineralization or primary material, they stopped drilling. There are, of the 200 drill holes, there are 40 holes at Mizpah that ended in 0.5 gram per tonne, and there were 20 holes that ended in greater than 1 gram per tonne. Holes ended in grades, last assay, up to 9 grams per tonne. Basically, our estimate of exploration potential, ballpark, it's between 40 and 100,000 ounces. It's ballpark 80,000 ounces of gold at a slightly lower grade, probably about 0.6 at this point. We drilled a hole in the current program, which is 350 meters down dip. So it was a pretty bold step out. We didn't get fantastic grade. We got about 0.2 in terms of the grade, 0.18, but we got 69 meters. It's basically indicating that the mineralizing system at Mizpah could be 2 to 3 times the size of what was estimated historically. I mean, it's completely open down dip again, exactly the same geological setting to Drum. Just a little bit of corporate material, just in terms of our board and our team, our executive team. Tom Eadie, I'm sure will be known to many of you. Tom was very successful with Siren Resources, Copper Strike, Discovery Nickel. Peter Williams, again, he was my predecessor as managing director. Very successful career with WMC, also Ampeller and Independence Group. Our team in the US, Bruno Hegner, ex-vice president of Resolution Copper, is leading our team in the US. Bruno's a lawyer. Our technical team is all based in the US. We have 30-year plus Newmont veterans. It was interesting because I'll tell you, they tried to get Newmont into Detroit and were not successful. So they're very motivated to sort of prove the Newmont geologists wrong. Corporate structure. We're very inexpensive at the moment. We have 425 million shares on issue. And we're a very inexpensive company at this point in time. And just in terms of the highlights, we're in a great jurisdiction in the US. Drum, we've got remnant oxide mineralization. We've got high grades of gold. It's open. We've got primary mineralization has never been tested. With those grades of gold that we're seeing in oxide, and the oxide is not enriched, but there's primary potential underneath there. And there's been no exploration since 1989. Our first holes are verified. In terms of Mizpah, virtually exactly the same story as Drum, untested. We've got a great experienced technical team in the US of Rio Tinto and Newmont veterans. Valuation, 9.8 million. Thanks very much.
Thanks a lot. Well, except for that whole 7 that you're going back to have a serious word with. And just whole 7, I will be too. Chris Cairns, can you come and join us, please, sir? Chris is going to talk to us today about Stavely Minerals. Stavely Minerals has recently completed phase 1 of a mineral, you're behind me, aren't you? Mineral resources drill out, and is currently conducting the most comprehensive regional exploration program undertaken in the Stavely area. Is it really 4 decades?
Yes.
That's when Scott was talking about the 80s, and I did Cairns back, I think that's 4 decades ago as well, really. So a lot of this new technology turning up some good potential for us and investors. Would you please put your hands together, please, everyone, for Chris Cairns for Stavely today.
Thank you. And thank you to Stuart and the team for the opportunity to present again. It's good to be back in Sydney. Spoken as a West Australian who've been trapped, by the way. Normal disclaimer. So when we went to Western Victoria, it was somewhere near Azerbaijan on the Fraser Institute Index of Exploration Destinations. So we were a first mover there. We were able to get a dominant 10-year holding in the belts that we wanted. And it was an emerging copper porphyry province. We IPO'd in 2014 with a $6 million raise and then spent the next 5 years looking for the deep porphyry we thought was driving the Thursday's Gossan prospect system. In the end, one of our consultants who was previously mentioned, Scott Halley, said to us, well, look, you've hit some high-grade structurally controlled copper, gold, silver mineralization. Maybe it's more like the magma Arizona type system, and perhaps you should save your money and start to look for that a bit shallower, closer to surface. And that really was the discovery. The very next hole discovered the Cayley lode. So we've been drilling that out ever since. So that since September 2019, 2.5 years, we are now finished, I'm pleased to tell you. And we're currently in the interpretation and number crunching phase for the mineral resource estimate that we expect to be out in the first week of June. So around 4 weeks time. It's a new style of mineralization, as I mentioned. It's the magma Arizona or Butte, Montana copper lode style. It's structurally controlled high grade copper, gold, silver mineralization, never seen before in Australia. So we have difficulties explaining to people the scale of this system. The best analog that we can think of in Australia would be the Cobar style systems that are vertically extensive down to, I think the CSA mine currently is operating at around 2 kilometers depth. And we have drilled this system down to 1 kilometer so far on one of 3 structures that we know are mineralized. So there are multiple discovery opportunities, both in the prospect area, but also regionally, and to wit, the very big regional exploration push that we've had recently. Not all of our results back. We probably got about 50% of our results back from that, but we needed to know whether there was another large system out there before we really started to collapse in and focus on the Thursday's Gossan prospect as the center of gravity for our development, if you will. We still have quite a bit of cash in the tin from our last quarterly, and we've gone down from 6 rigs operating last quarter to 0 rigs operating this quarter. We're very much in the number crunching phase. So a few stats, as mentioned by previous speakers, it's been a bit of a tough time in the market. I think a lot of people are anticipating what the size of this project is, and so we won't know for a couple of weeks yet, but at least we're on that we can see the light at the tunnel, if you will. Very experienced team. We're almost all former Integra Mining, and Rob Dennis joined the board as a very experienced developer, ex-Independence Group. I worked with them at Lion Ore, so we've got that long-term association, but very, very experienced engineers. So the company is evolving towards that sort of development type company. The project area, we got almost 1,500 square kilometers in Western Victoria. We focused on the Thursday's Gossan area in the circle there, but we do have another resource up the top. Up here, we call Carroll's Copper Deposit. It's near the regional town of Ararat. It's a VMS style deposit, not a porphyry. So focusing in on Thursday's Gossan, it had a chalcocite-enriched blanket. Previous operators thought that it was developed on top of this porphyry. It's a very large, low-grade, more moly style porphyry, but we now know that the structurally controlled mineralization is on the margins of this, and that's what the chalcocite blanket's developed off. So that had a very large resource that we acquired when we acquired the project at 28 million tons at 0.4% copper. It does give us a lot of leverage to the copper price. If Goldman Sachs and various others, Jefferies, are correct, and it's going to US $25,000 a ton, then we have a massive leverage to those escalating prices. However, we did discover in 2019 very much different style of mineralization, this high-grade lode style, and we'll have that resource out in June. Not to be forgotten, of course, is the Mount Ararat, or we now call it Carroll's VMS, just over 1 million tons, but it's sweet, 2% copper, 0.5 gram gold, 0.4 zinc, and a bit of silver. So the story so far, as mentioned, we looked for the deep porphyry initially, spent about 5 years doing that. Scott Halley says, look for this higher grade structurally controlled stuff close to surface. So our final porphyry hole was 1.8 kilometers deep, and it got spectacularly nothing. So that was the epiphany from Scott, was drill shallow. And that was that hole 50 in that little square there. And there it was, that very hole, 32 meters at almost 6% copper, 1 gram gold, 2 ounces to the ton silver, including a spectacular 2 meters at 40% copper, 3 grams gold, and almost 0.5 kilo or over 0.5 kilo of silver to the ton. As it came out of the hole, it looked beautiful. We announced it probably 3 weeks before we got results, and the share price went down. indeed. So it is a magma / butte copper lode style system. So again, not well known in the Australian context. We've just completed drilling this out at about a 40 by 40. So we have a very high degree of confidence that will bring a very large proportion of the resource into the indicated category, which then gives us the ability to go through to reserves on that with further studies, but it also allows us to put production targets and financials out with the scoping study that we expect to release in July. So it's quite a tight time frame for us, but we've been drilling this out for 2.5 years and we know it pretty well. Just on the air photo there, we did have a little bit of trouble in access originally in this area. We've now completed our drilling there. We've rehabbed, and I had a cup of tea with the landholders last week, and they're all very happy, and it was cordial and very good. So all the landholders are good, but just a little bit about the nature of the ore body. It's on the contact primarily of this ultramafic here and the volcanosedimentary sequence here, the lode style system on that contact. In this instance, hole 87, really nice hole, 87 meters at 1.75% copper and almost 0.5 gram gold. But typical of these intercepts is that broader intercept would be attractive as an open pit. You take all of it. But all of these intercepts have higher grade subintervals. In this case, in the middle of the intercept, 24 meters at 4.2% copper and 1.25 grams gold. At the basal intercept, which is always very, very consistent for us, 9 meters at 4.1% copper and almost 2 grams gold. So it's also amenable to underground development with those coherent high-grade zones of mineralization. It's very much a characteristic of the intercepts that we get at Cayley. Another illustration, this one a little bit just misleading to the extent that it hit the chalcocite blanket up here, so secondary mineralization, so copper, low-grade copper, no gold or silver in that because it's dispersion from the lode. But then the main lode is in here, 85 meters, 1.5% copper, 0.23 grams gold. That is absolutely garden variety, vanilla flavored intercept for the project. But again, that basal intercept of 28 meters at 3.3 grams copper and about 0.5 grams gold is the type of thing that you would be happy to go underground on. So that's the message that I'm trying to hammer, is that this is amenable to initial phase 1 open pit development and then swinging underground. This is a more recent hit, a beauty, if you will. The market had some concerns that we had mentioned a low angle structure affecting the mineralization and whether the mineralization continued below that. Well, here you go. Hole 173, well and truly below the structure, and 43 meters at 2.6% copper and 0.4 gold. But again, those subintervals, 3 meters at 10% copper and 3 grams gold. And for a geologist, the core looks absolutely sexy. And this is another picture of what I call rock porn. It is hematite, specular hematite, magnetite, and layers of chalcopyrite. It is absolutely gorgeous. But this is our latest hit, a double banger up here. We've got 10.4 meters at 4.3% copper, 3 grams gold, with some really, really sweet subintervals, and then another interval just a bit further down. That was 14 meters at 1.2% copper, 0.7 grams gold, with a smaller subinterval of 3 meters at 3.5% with a bit of gold as well. So certainly the ore body does extend at depth, but that's not part of our phase 1 scoping study. The phase 1 scoping study is just the open pit. So this is what it looks like in long section. Huge number of hits up the top here, pretty much that low angle structure where that is about 200 meters below surface. We anticipate the open pit will take everything in here, and then a southern plunge heading off in this direction. Hole 173 that I showed you just here, 182 in here, and those circles, the big magenta circles, is plus 100% copper equivalent meters. So consider it equivalent to 50 meters at 2% copper, or the other way around. But it's very, very sweet, and it is demonstrably continuing, and we've yet to close it off in that direction. But that's not surprising to us, because we've got drill hits in other structures here. On the copper lode splay, or CLS abbreviated. We've got 6 meters at 7% copper and almost a gram gold in hole 32. I won't go through all the numbers, but down here, 44 wedge 1, 18 meters at 3.62% copper from 850 meters depth. We've got deeper intercepts, hole 45 hit at 1,075 meters depth. So we've traced this thing down to a kilometer below surface on 3 main structures, but our focus has just been up here, really. That open pittable, if you will, structure just there. We've got a couple of hits below that low angle structure in here, but we've not gone after the mineralization here or in this structure yet. That's part of the pre-feasibility. So we've completed that resource drill out. We'll continue to define that mineralization on the ultramafic contact below the low angle structure, bring in that mineralization from the copper lode splay, extend that up to depth, up to surface, and then bring the north-south structure mineralization up to surface as well. So, and testing regional targets. But we still believe that the porphyry is down there. We just need to digest all of the data we've collected during this resource drill out, and then we'll have another crack at it probably near the end of this year. So how do we see it as a development? Well, it appears a phase 1 open pit. So that's what we're doing the scoping study on. That's the top 200 meters. The next 800 meters down is the phase 2 underground development. We anticipate that we'll come off the base of the open pit and spiral down, and then we start to access 3 mineralized structures from all the underground infrastructure. If you anticipate that a underground mine, the vertical rate of advance per year would be something in the order of 50 to 60 meters per year, we're looking at a 2-decade underground mine after the open pit is finished, and we believe that to be 5 to 6 years in its own right. So it's a multi-decade operation. That's the opportunity. What we bring out as a scoping study is the top 200 meters. What you could consider as the phase 2 underground development is likely to be 4 times that. So it's an incredible opportunity for a long life operation. Just a little word about the Cairns copper deposit. This does feature in the production cycle just because it's sweet, 2% copper, 0.5 gram gold. We're anticipating about 300,000 tons per annum production, so we're not stressing the asset. And we intend to, we've got a little bit of a vertical exaggeration here, 800 meters across, 250 down. We'll just infill that and bring it down to about 500 meters. And just, it's like shooting fish in a barrel. Nice result is the deepest hit, 6 meters at 3%, 0.4 gold. So we finished that shallow development. We'll do the mineral resource estimate and scoping study, and then we'll roll into defining what the undergrounds look like. It's a pretty straightforward plan. I won't go through the regional exploration. We're waiting on assays. Just watch the announcements on that. And otherwise, that's our timeline. We're in that busy period of resource estimate and scoping study. And I won't go through the ESG slides either. So thank you very much.
You're a geo, Chris? Are you a geologist? You are a geologist, and you got very excited by your rock pool, didn't you? You did. I heard a dad joke for you before. What's the problem? Well, why do you have to be patient with geologists? And I sat here and thought, I'll be patient with him. I think he's a geologist. Why do you have to be patient with geologists? Because they all have their faults. It's tragic, isn't it? All right. St. George Mining, they have got a very exciting portfolio of projects in WA focused on forward-facing metals, including its flagship Mount Alexander project, where high-grade nickel copper sulfides have already been discovered over a strike of more than 5 kilometres in length. Executive Chairman John Prineas is joining us to present the St. George story. Please make him welcome.
Thank you very much. Thank you. Thank you. Very pleased to be here to tell you about our latest work. So most of you know our Mount Alexander project. That's our flagship project where we've discovered nickel copper PGEs over a strike of about 5 to 6 kilometres in Western Australia. But we have another 3 projects which make up our pipeline. The Patterson project, which we have already announced quite a bit of news about. That project is very, very exciting at the moment because we're about to start drilling. It's up in the Patterson province, of course, Elephant Country. We think we've got very good quality copper gold targets we're about to start drilling, so keep watching for that one. The other two projects, Broadview and Ajana, also in Western Australia, on the western margin of the Yilgarn Craton. The margin of the Craton is very fashionable at the moment. Julimar discovery has made that. And both of these projects we've identified large magnetic anomalies. We need to drill them to prove that they're mafic intrusions, but if they are, they're very prospective for nickel copper PGEs. Quick corporate snapshot. The main points to tell you about here are our cash position. We've raised $5 million in March, so we're cashed up to do all the exploration we want to do. And the other important thing on this page is our technical team. So we've got David Mahone, ex-Western Areas, leading the field team as exploration manager. And we've got Charles Wilkinson and Julian Hanna. Each have decades of experience in Western Australia with nickel exploration, both ex-Western Areas. Charles has been with us for 3 or 4 years. Julian's our new boy, joined us in March. So we're very excited that Julian has joined us, and hopefully that's a testament to the quality of our projects. You probably heard a lot about the nickel price. I won't bore you too much, but we certainly are bulls when it comes to the nickel price. That top chart shows you the nickel price in the past 3 years. The bottom is 2020. Next one, the gold line, is 2021. You can see it's a little bit higher still. And of course, 2022, higher again, some wild gyrations in 2022. But certainly the clear indication from that chart is that we've got an upward trend in the nickel price. The bottom chart is the LME stockpiles. You don't need to be an MBA in economics to know that when the stockpiles drop, the nickel price is going to go up, and that's exactly what's happened this year. Electric vehicles are the main driver for nickel, particularly class 1 nickel that we have. That is a chart showing the installed batteries for EVs year on year to January this year. So you can see the NMC battery, which is a nickel-rich battery, 70 to 80% of that is nickel. Huge increase. Quote there from BHP, huge demand for nickel over the next 10 years just to deliver into that demand. There's only one way to meet the growing demand for nickel, and that is through exploration and development. You're not going to get investment in exploration and development unless you have a high nickel price. It's the incentive to invest. So I think that means the nickel price is going to stay high for the very long foreseeable future. That brings us to Mount Alexander, where we have discovered high-grade nickel copper sulfides. So we're in Western Australia, just southwest of the Agnew-Wiluna belt, where BHP has flagship operations. Cosmos Western Areas operation is there, about to be taken over by IGO. You don't need to have too much economic ability to guess that these guys are probably wanting to have a chat to us. We've got infrastructure nearby, so it's going to be very easy to develop this when we finally get the right resource size. We're not in the middle of nowhere. We have to spend hundreds of billions of dollars on infrastructure. It's a very strange package that we have up at Mount Alexander. We have a typical komatiite belt, which is the north-south trending belt. And we also have the cathedrals belt, which is east-west. Now that's extremely unusual. We're in the middle of the Yilgarn Craton, which is an Archean age, but this east-west belt is Proterozoic age. So very unusual, but extremely good because it's giving us high-grade nickel copper PGEs. So the discoveries we made so far are all shallow discoveries. We used EM surveys, electromagnetic surveys, to detect the conductive nickel sulfides. It's been a fantastic tool. Every conductor we've picked up near surface has proven to be nickel sulfides. That's a 100% success rate. Most projects would have a 99% failure rate. So we've been very lucky picking up the low-hanging fruit. Some wonderful widths and grades that you can see there. And a strike across 5.5 kilometers. That's telling us that if a system is this long, it must be a lot deeper than the shallow discoveries that we found. That is driving exploration to deeper levels. Over the past 18 months, we have completed quite a few deeper holes. We haven't had any great massive sulfide hits until last year when we hit 11 meters at about 300 meters below surface. So that was a fantastic hit that confirmed to us that the mineral system does continue at depth. All our deeper holes did hit the intrusive host structure. So it did tell us that the system is continuing, and MAD 199 confirmed that it is actually fertile at depth as well. So that's fantastic. We did some seismic surveys last year. So seismic is very good at mapping the fault structures. And that's important because our mineralization is hosted in the fault structures. So we drilled these seismic targets, confirmed that the seismic is 100% mapping accurately the fault structures. Unfortunately, seismic isn't as good as EM in picking up nickel sulfide deposits. It did find a few blips along the way, but they weren't massive sulfides. But it did at least give us the information about the continuity of the structures. We've stepped back and trying to think, where is this big deposit lurking down at depth? And we've come up with these 5 conceptual targets. The first one is the intersection of the Cathedrals Belt, East-West Belt with the Ida Fault. The Ida Fault is a major boundary craton defining fault. So the intersection of those structures could be very, very prospective, could be the feeder zone or some other control on the mineralization. The other target is radar, where we have a shallow discovery. Oops, sorry, tried the wrong button. The radar discovery there. We did a couple of step-out holes, didn't find more mineralization, but there is more than 2 kilometer magnetic anomaly. Magnetic anomalies, when we see them in the Cathedrals Belt, are often associated with mineralized ultramafic. So we want to go back and do some more EM surveys there and see if there's something else at the bottom there. Target 3 is Fish Hook over here. That is the longest magnetic anomaly that we have in the whole belt. We did put some holes into that a couple of years ago. It didn't really find very much, but we now think we have probably put them in the wrong place. So we're going back to do some more EM surveys there and see whether we can find something to drill. Number 4 here is the granite greenstone contact. If anyone knows anything about Forestania discoveries, most of them were driven by the granite greenstone contact. So that's totally unexplored and could be extremely prospective. And then there's a bullseye anomaly here, a bullseye magnetic anomaly, very similar to the Strickland's deposit to the south. That's never been drilled, so we want to go back and drill all that too. We do have the near surface mineralization. We do want to work out exactly how big that mineralization is. So we've been doing some extension drilling. We completed the last 2 holes we drilled, and the current program of extension holes at Strickland's. They both hit nickel sulfides, probably about 50 meters northwest of where the envelope currently sits. So we are continuing to see that the deposit is open. It's continuing to be open to the north, to the east, and to the west. So a lot more drilling to be done there to really find out the number. Similarly, at the Cathedrals and Investigators deposits, the first one is, I did it again. Cathedrals over here, you can see lots of really high-grade hits starting 20 meters below surface. So that's fresh nickel sulfides, 20 meters below surface. Lots of infill drilling still to be done there to see exactly how big it is. It's a 400-meter strike, so potentially reasonable tons. The bottom corner is the Investigators deposit. That's got a much bigger strike length, about 1.2 kilometers. You can see it's quite discontinuous at the moment. That's because we haven't got the infill drilling completed. The background image there is EM. EM is lighting up quite strongly, that white pinky color. So it's telling us that there could be potentially a lot more mineralization there. We're going to go back and do some more infill drilling to work that out. So lots of drilling in 2022. We've already finished the first phase of the diamond program. As I said, the last 2 holes hit nickel sulfides at Strickland's, assays still to come. Diamond rig will be coming back after we finish the geophysics surveys. We want to roll out seismic and EM to firm up those 5 conceptual targets to see if we can see something at depth to go and drill precisely. And also the RC drilling will come back to do most of the extension drilling, but also to target some of the shallower conceptual targets. We've done some important metallurgical work just to make sure we can monetize and commercialize our mineralization. We've done some metallurgy with Strategic Metallurgy in Perth. That was the early stage work we did, and we did some very, very detailed work with XPS in Canada. They're a Glencore subsidiary. The reason we went to Canada is because our mineralization is quite similar to the Raglan mine, which is owned by Glencore and which XPS does the work for. It's the nickel, copper, cobalt, PGE mix, which you just don't see in Western Australia. So we confirmed that we can produce separate nickel and copper concentrates from a conventional flotation circuit process. 27.8% copper concentrate, 11.5% nickel concentrate, and some really strong payabilities for our palladium, for our platinum, and as well as cobalt, and also some gold and silver in there. So XPS produced a flow sheet for us so we can commercialize this mineralization. We are also looking at other possible processing techniques, glycine leaching and others, and it's a matter of how big the resource is, what process we're going to adopt. That's the Mount Alexander project. As I mentioned, the Patterson project is the one that's about to be drilled. The diamond rig should be on its way up there right now, and we should start drilling next week. You probably know the WIN discovery, which is at northern Patterson, just like us. So that's WIN there, and that's our ground up here. The other big one of note is Telfer down here. So we have 100% of this tenement. Our neighbours, SIPA and TIPA, have done joint ventures with RIU, quite attractive joint ventures. We've got 100% of the ground, and we'll be trying to put as much meat on the bones before we entertain anything else. We did some shallow air core drilling last year just to confirm the depth of cover. It's only about 150 meters, which is pretty good for that area. And the drilling also intersected the right kind of lithology, metasediments, and other kind of geochemical signature, including chalcopyrite, which is the kind of thing you want to see that hosts those kind of deposits in that region. We did geophysics up there as well, gravity and magnetics. The best slide is this one here. These are the drill targets. You can see these fold noses, this possible dome structure. Come out to the booth and talk to our team. They'll tell you a bit more technical detail as to why these are super attractive and could be another WIN deposit lurking here. The Broadview project, it's about well, southwest of the Mizpah Prospect. It's along the same mobile belt. We've got splays of the belt going off to the west. So there's very strong magnetic anomalies. 20-25 kilometers. We need to test them to make sure they're mafic intrusions, and then they're potentially prospective for nickel copper PGEs. The Ajana project is our latest one. That's up in the Northampton mineral field, so 500 kilometers north of Perth, just north of Geraldton. We've pegged this ground. There's been a lot of lead, zinc and copper mines up there. They were all discovered from outcrop. Our ground has got about 50 meters of cover, so we had to do magnetics. And they're really, really great. So we've got this big intrusion in the middle of our ground. We again think it's a mafic intrusion and therefore probably prospective for nickel copper sulfide. So we'll get up there and drill it as soon as we can to find that out. And that's the summary of the presentation. Thank you very much.
Thank you very much, John. Now we have one more presentation to, what number is your booth? Oh, good question. Okay, you're going to find John outside there, so I go and find him and have a chat with you. Steve Norrigard is going to round out this session for us before lunch. You're feeling very comfortable. We've got the temperature turned up in here. If it's too much now, I'm taking off my coat. Right, Steve, you'll have seen Steve if you've gone all the way down the back to the coffee, because he's got the booth right near the coffee. So you've probably been eyeballing him all week. Widgie Nickel is a company singularly focused on creating value from its Mount Edwards nickel project through resource delineation, expansion and ongoing exploration, with an end goal of re-establishing a production base by the end of 2023. It's all about critical metals for a greener future, correct? Would you please make him welcome? Thank you.
Thank you very much, ladies and gentlemen. Vertical Events, RIU, Chrissy, thank you very much for organising the conference. It's been great. At long last, us people from the wild west can get over to the east and reacquaint ourselves with our friends. I should also thank Emperor Mark McGowan for knocking the border down and allowing that to occur. So it's all good. However, I jumped on the plane on Monday afternoon and was looking forward to it. It was super exciting. And I get over here and then on the news, we're talking about flu rona. What's flu rona? No one told me about that. The border's coming back up. What's going on? Anyway, thanks very much. The normal disclaimer. Okay, Widgie Nickel. We're a relatively new entrant to the ASX, a company that's been born out of Neo Metals. In September of last year, we listed. The process of us coming to market was one of the Neo Metals shareholders received an in-specie distribution of shares in a new vehicle and a subsequent entitlement issue. We raised a big chunk of money, $24 million, but we've got a lot of work to do. So the future is very much assured for us. The value proposition for Widgie Nickel, the Mount Edwards asset is a relatively mature asset, and we benefit from a lot of work that our predecessors have done. We sit here today with a project that's got just under 170,000 tonnes of contained nickel already identified, over 12 resources. That's contained on a tenement package that's seen exploration conducted on it since the late 1960s, some 240 square kilometres of mining tenure. Not only do we have those 12 resources in place, we have an abundance of regional exploration targets, the legacy of all the exploration that's gone on in that time. So we're sitting in a great position. The project itself has been future-proofed in many regards in the sense that there already has been historic production. The tenement package has seen 4 producing mines that have produced over 30,000 tonnes of nickel. And all of that product has gone through the nickel concentrator in Kambalda, which was owned by Western Mining. It's now owned by BHP. And I can tell you that facility is just about ready to be recommissioned as we speak. Our location is really, really good. The word was that Western Australia is the foremost mining jurisdiction in the world. That's a great thing. Well, I can tell you the location of our project is the best place in Western Australia to have a mining project. So best mining location in the best mining jurisdiction. We're only 80 kilometres from the gold mining capital of Australia in Kalgoorlie, and Kambalda can probably lay claim to being the nickel mining capital of Western Australia. Kambalda is only 40 kilometres away. We sit beside, within 2 kilometres of the main road that joins Perth to the eastern seaboard. So access to our project is readily achievable. We've got natural gas pipelines that run proximal to the project, potable water, which is a big issue for us in Western Australia. We don't have a lot of water. Railway lines, and in the case of moving product to international destinations, the seaport of Esperance is only some 250 kilometres to the south of us. So a great location. We benefit from a database exploration that dates back to the mid-1960s. It's a real benefit for us. However, it also provides opportunity. The focus for the project for virtually its entire time has been principally focused on nickel. We've discovered and believe that we have a significant endowment of base model byproduct credits that we don't fully understand. Our drill hole database has less than 10% of those assays looking at platinum, palladium, copper, and cobalt. So the process that we're going through with the money that we raised in terms of infill drilling, we'll be able to populate our resource models. And when we come back to you in the months and the years to come, we'll be able to tell you not only about the nickel endowment, but also the byproduct endowment, because I think that will add significant value as we go. Part of the float with $23 million, we've allocated some $5 million to exploration. So that'll be an ongoing feature of what we do in the future. Our strategy is very, very simple. We've got a project that's relatively advanced, and the opportunity for us is to harness the wave that we see that's basically grabbed the nickel industry over the last 2 to 3 months in particular. We're perfectly poised to harness that. And when we floated, we stated the goal was to be production ready by 2023. Well, probably about mid-February, we thought to ourselves, we should be doing everything in our powers to accelerate that. So with that, we've increased the focus on one of our 12 resources in Armstrong with a view to bringing that into production as early as we possibly can to capture the momentum that's established. Armstrong will be low capex. Our strategy is simply to mine the ore and to sell that to BHP. They've got a processing plant of 1.6 million tonnes per annum in Kambalda. That is just about to be recommissioned. It's only got one customer in Mincor, and Mincor will only provide some 500,000 tonnes per annum of ore ultimately to that facility. So BHP are out looking for additional customers, and we've got a good dialogue going on with them. In the medium term, we'll continue with the process of infilling our resource base in terms of upping our geological confidence and understand the metallurgy. And we may well continue down that same path of selling our ore to BHP. That's part of the plan. But we've got to understand those byproduct credits. With 12 resources, we've got a huge amount of drilling we've got to do. We'll keep the rage going on our exploration effort. One of our neighbours in Mincor is now currently mining the Cassini Deposit, which has a head grade of some 4%. That's now, I believe, very, very close to delivering ore to Kambalda. I'm supremely optimistic there's more of those sort of resources in our tenure. We're in a unique situation on our 240 square kilometres of tenure that with those 12 separate resources, each of which has had a geochemical signature on the surface, they've all got a oxide nickel component. And in aggregation, it adds up to quite a significant amount of nickel, but there's never been a flow path or a flow sheet devised in order to be able to bring that to a saleable product. By virtue of the aggregation of our 12 resources, we're now looking at that oxide nickel with a view of can we extract any value for that? And we've got work streams underway that may well lead that to being an additional production centre for us in the years to come. In the longer term, it's clearly evident when you look at a nickel sulfide producer that the end market for our product is in the battery sector. And with that, the traditional way of a nickel miner bringing his product was to make a concentrate and sell that on the open market. Now it's all about looking at downstream processing and making battery precursors such as nickel sulfate. We don't want to have a high capex initial entry into the to develop our project, but in the longer term, I think there's significant value that we can add to that project, given the size that we've got. BHP, as we speak, are the only company in Australia that are producing nickel sulfate, and we see that they want to protect their thing, but there's an opportunity. Indeed, when you look at the greater market, RIU tendered their stock in Western areas to the independents bid voluntarily, but in return for forming a 30-70 joint venture to investigate downstream processing. So that, to me, tells us that Widgie has a wonderful opportunity, given our size, to look at downstream processing, increase the payability of our nickel, capture all the value from our byproducts. So that's in the longer term. Very, very busy 6 months for us. We listed on the 22nd of September, and we've got a total of 14 people within the organisation now. We've appointed both diamond and RC drillers. They're both working now on a 24-hour basis and will do for the next 12 months. We ramped that process up. We use RC to do all the pre-collars because it's cheap and it's fast, and we use diamond to intersect the mineralisation so we get a pristine sample. And that work will remain ongoing. In March of this year, we announced a resource, or very late in the March quarter, we announced a resource upgrade on one of our Inco boundary. And we've only just announced the result of some of the geophysics work we've done. drill results have been a long time coming, but we've certainly filled the sausage machine, so to speak, and there will be an ongoing flow of drill results as we look forward. The focus and the outlook for the forthcoming period is obviously focusing on our Armstrong resource and bringing that hopefully into fruition early in 2023, looking at the oxide test work. So there'll be many different avenues to which we look towards. The endowment. It's ironic that all of our resources which lie on the eastern side of what's known as the Widgie Nickel Ltd Dome are all proximal to the highway. It provides ample opportunity on this western side of the dome for new discoveries. You see all these resources, and they all remain open at depth. They've all been drilled out to probably 400 vertical metres. Ample opportunity to see them grow, and in some cases coalesce with others. So we'll keep on working on this for the ongoing future. We talked about Armstrong. The process with this is well and truly on foot. We've started the permitting process because we've got to get rid of the water out of the open pit. Infill drilling is on the cusp of being completed. A busy third quarter of this calendar year with met test work, discussions with BHP, a preliminary or a scoping study outcome. The culmination of that hopefully will allow us to complete a full feasibility in the fourth quarter of the year with the stretch target, pending permitting outcomes, of being ready to commence a new mining operation in the new year. The resource here is some 13,000 tonnes of contained nickel, which should represent a project of between 3,000 and 4,000 tonnes per annum for a 3-year mine life. Widgie South is probably going to be a cornerstone of the operation in the long-term future. You see a 3D model here on the right-hand side, Widgie 3 and Gillett at the southern end, the Widgie town site resource. In aggregate, 70,000 tonnes of nickel metal in a 2-kilometre long corridor. Very much unfinished business here in terms of defining the mineralisation. You'll see the go back. The proposed drilling here, the potential for mineralisation to coalesce with others here is a apparent product and an artefact of just doing more drilling, which remains ongoing. The potential here for one single mine is apparent. Mundo is another area where we've got ample opportunity to see the resource grow. In the next 6 weeks, we'll complete diamond drilling with 25 holes to intercept the mineralisation here. As we look down dip, which is going up the page here, ample opportunity to see us grow the size of this high-grade resource. So we'll recalculate a resource in the third quarter of this calendar year. We talked about exploration. Geophysics, you always got to have a geophysics slide in a presentation. We've just completed some moving loop EM work on our tenure, and we've found some very good conductors. On the left-hand side, you'll see an image, a strong EM conductor of some 3,500 Siemens, which is the unit of conductance. On the right in Widgie Central, some 5 high-order conductors of up to 2,500 Siemens in strength. On the ultramafic contacts you see there, I've got a 3D picture here. When you talk about geophysics, invariably, you've got to understand that conductance may see sulfidic ore bodies or anything. The reality is, if it's coincident with nickel, it's a very important attribute. And you can see here that these EM conductors are coincident with nickel metal. The team, broad spread of experience, an appreciating share price. Jump on board, win with Widgie.
That's what we wanted. Win with Widgie. Come and grab a coffee, have a chat with the man and enjoy your lunch. We'll see you back after lunch, everyone. Thank you.